an entry point. I want to keep my share price. Many of you know is the Son of Doom. One of the largest figures in New York City.
Michael in St. Catharines, Ontario.
He waited so long to get into the basketball. But I just called him to be elated now that he's on the floor. Doom was a legend in the area. And Junior would be lucky to have that same kind of impact.
For the last 3 or 4 days, what do you think of the dividend being safe and the outlook on that stock over the next 2 or 3 years? I'll stand by and listen. Thank you very much.
Thanks for the question. And Manulife is an insurance company that we've owned for a number of years in our client portfolios. It has had a nice little bounce the last few days, but arguably it probably got overly sold on the downside in the weeks coming into that rally. The company reported this morning, I thought the results were actually in line. They were actually able to post an investment gain, which is, I can contrast the last 2 quarters where they had to post some investment losses from their portfolio investments. But I think long-term, the reason why we own Manulife is we like the positioning in Asia, where we think it's a faster growth region for life insurance products, it's like a third of your profit. And I think the company's done a really good job of kind of segregating the low growth areas of the business that they want to try to run off or reinsure. I think they've actually managed to continue along that way. And so we like the progress they're making. The valuation is very attractive. This company trades at a very low multiple, price to earnings multiple, as well as price to book value. I think the dividend is safe at these levels. And so I think that in the next 2 or 3 years, it's good capital upside potential, and I would hold it.
He's performing admirably, really setting the tone for the Devils out there.
Michael Brady here from the Inside Corps. Mike in Windsor. Could you tell me if it would be the entries point in Apple and the long-term hold? Thank you.
Outguarded by Apple.
Yeah, Apple, that's actually one that's on my watch list, because I do think I would be buying it at this level. I would be buying, maybe 5 to 10% pullback, which you can get. It got down to, I think, a 106 level in the latest pullback we saw with the large cap tech stocks. And so once it gets back down there, I think you want to start nibbling. It's well positioned in the iPhones. They're going to go through a replacement cycle with the 5G phones. I think that'll be very beneficial for Apple. And they've been very good at growing their services business now, which is more recurring in nature, which is also plus going forward. So yes, I think this is the name I want to add to our client portfolios, but once again, a little lower.
Excellent job fighting through the contact.
Okay. And Michael in Burnaby, another Michael, third in a row.
Down in
BBC, go ahead.
Eagles getting a big win here at Sheffield.
In September, you recommended Algonquin Power
See the impact that Junior has had on the career.
$18.37. I believe it's still up. I believe it went up a couple of dollars to, but you still recommended this price? Thank you very much.
Okay. Yes, Algonquin Power, we are holding our client portfolios, and I would continue to hold it. I really think, about 3/4 of its operations is regulated utility, and then they balance 25 to 30% is renewable power. And that division is gaining a lot of traction. Obviously the renewable power, I think, is a long-term secular trend that is not going to go away. And the regulated operations are very defensive, very stable cash flow stream. This company, 90% of its cash flow comes from the U.S. So I think it's a great, we consider Algonquin an income stock. While the yield is not necessarily the highest absolute yield out there, but it does have an attractive yield in I think it's just under 4%, around that 4% range. Annie, you can confirm. And I think the company will continue to grow its dividend in the years to come. And that's another thing we want to see. We want to see dividend growth visibility, and that comes from a growing cash flow stream. So yes, I would keep holding it. I think it's a good long-term hold.
I'm showing you a dividend of about 3.8%. Okay, we are going to take a break. Christy Cole is going to take your questions, or is taking your questions on North American large caps, 1-855-326-6266. It's not. It's good.
Real quick, I want to know the tape show the right people. It's the step. 2 days, a small sample size, but it gets to conclude that the room and pitch your deal.
Hi, I'm Steve Gordon, and you're watching Market 1 Minute. Joining us is Wayne Tisdale with Canadian Williams. Wayne, what makes you believe the company is a strong asset?
I think with the jurisdiction we're in the place we're operating is the number one piece, and we have an inferred resource of 523,000 ounces. We're only 90 kilometers west of Sudbury along the highway, and we have a unique piece of we have a drill rig on. Even in the COVID times, we've got a really good program building off our inferred resources to take it up to hopefully 1.5 million or greater. And we've had great drilling results in the last 2 news releases, and we're finding the resource that we think is there. Thanks for joining us. Thank you.
Closed captioning of this BNN Bloomberg program is brought to you by Brixton Metals, a gold, silver, copper company with exceptional drill results, great liquidity, and well-financed.
It's not going to be a situation. So,
John is standing by in Ottawa. Go ahead, please.
Yeah, thanks, Andrews. Christine, I recently sold out of our cargo jet about 240. With the idea of looking to get back into it after a correction, and I see it's had a nice correction. What would you consider a good entry point if you would? Thanks very much.
Okay, yeah, we don't have a cargo check. Obviously, it's benefited from e-commerce and all the shipments that are associated with that. To me, I think the stock will continue to do well, given I think e-commerce is an ongoing secular trend. But myself, it's still a little too expensive to get into. So I would say, if it's corrected, but to me, it still has to go back maybe at least another 10-20% before we could seriously look at adding it to our client portfolios.
Big 10, Big East.
Oh, okay, so not calling to you right now. Frida in Chilliwack, BC. Fire ahead, please.
Hello.
Your bank?
I'm interested in Enbridge. I'm wondering
Go get a job,
if
but
what you think of the Keystone Pipeline going through and how that might affect Enbridge in the long run or not. Thank you.
Okay. All right. So Enbridge is a pipeline infrastructure stock that we do own in our client portfolios, and Keystone is actually TransCanada's pipeline that's supposed to be built. It's been built on the Canadian side, but I think with Biden coming in, one of his policies, I think he wants to, put a halt to Keystone. And Enbridge has their own pipeline going through the L3, which is Line 3, which I think is proceeding. It's gone through many delays, but I think finally it should start coming into service next year sometime. And so we like Enbridge. It has a very attractive dividend yield, over 8%. The company reported on Friday. The company was able to affirm their guidance that they gave pre-COVID, so that's very encouraging. Given what's happened to the commodity prices. But once again, Enbridge, they have natural gas pipelines as well as liquids pipelines, and these are under long-term contracts. So the cash flows are pretty defensible. So, I would be buying it here. We bought it for new client money that came in on Friday when it's down. I think the dividend is safe, and in fact, the company maintains that they continue to grow their dividend over the next, few years at kind of that mid-single-digit range. But the discussion on the phone calls was really like, do they really need to grow the dividend? Because even yielding at 8%, the stock almost got to 9%, between 8 to 9%. That's a pretty attractive yield. And I don't know if they're being paid to have that dividend. So they are considering potentially maybe looking at stock buyback. Because of the valuation is so low here.
yeah, I heard the story before.
You're not listening. You got it all figured out.
Thanks very much for that question. Let's get to Alexander in Toronto. Alexander is thinking about pipelines. Go ahead, please.
Hey, Andy. I'm first-time caller here. Hey, Christine. I'm just wondering about your outlook on TC Energy. I know you just talked about Enbridge. I want to know what you thought of their recent earnings report and whether or not
like you commented on Keystone already, whether or not this is going to impact Enbridge or TC's liquids significantly enough, considering that they have mostly natural gas pipelines in their portfolio.
Yeah. Our two primary infrastructure names is Pembina and Enbridge, and TC Energy, I think, is also a good candidate to own as an income stock, and that's what we consider TC Energy. Once again, very, defensible cash flows, long-term contracts, investment grade clients. That whole infrastructure sector has been kind of the same bucket as energy producers, and the sentiment on that whole group has been pretty negative. So I think they're all pretty attractive, and I would have no problem holding TC Energy in our client portfolios. Keystone's been, the debate on Keystone has been ongoing. So I think that even if it does not come through for TC, it shouldn't really impact that company significantly in the long term. And that pipeline, even if it gets approved, it's still going to be a few years out. And arguably, you don't need a third pipeline, because we know Line 3 is being built and Trans Mountain is going through. So I don't think it really, over the long term, it's not going to have a significant impact for TC Energy.
That's interesting, yeah, but maybe we have enough pipeline capacity for now. With Line 3, that giant Enbridge replacement project and Trans Mountain. Let's head to Mark in Ottawa. Go ahead, please.
Christine, I got a question about Baba.
Yes.
They seem to have dropped quite a bit, and with the regulatory problems with China and everything else, I think they might have reached their bottom plateau. Is it a good time to buy right now?
Okay. We've never owned Baba, and, part of it was valuation, and obviously, the primary internet e-commerce platform in China and Asia. And you're right that, the regulatory scrutiny from China has been a huge overhang on the stock, even though they had their Singles Day yesterday, and I guess it was the amount of sales was incredibly high and record highs. And so, the regulatory scrutiny, especially coming from China, I think is going to continue to be an overhang on the stock, and we're not quite sure, what the final outcome is and how they are going to enforce, what they put out there. So I think for now, I would still stay away from the stock.
We are going to take a break. We're going to have a look at Christine Poole's past picks after this. She had 3 winners for you, including gains on fast food and snack food. We'll be right back.
Are you looking for investments that have performed well with the potential to make your financial plans a reality? Many investment options likely won't grow fast enough to meet your goals. So consider this. Capital Direct investors have seen returns of 6% and higher for multiple years. And it's all based on lending to Canadian homeowners secured on real estate. Now, that's performance I like to see. If you'd like to invest along with me, call us today or speak to your financial advisor and ask for a copy of the offering memorandum.
For many of us, our paychecks go directly into our bank accounts, and with automatic payments, we may not even notice what comes out. And not knowing could be an issue. Many behavioral economists will tell you that if money is separated and labeled differently, we may feel compelled to use it for the things we've actually allocated it for. They call this mental accounting. Back in the day, families used jam jars to divvy up their spending. You could see what the money was for. It was also a visual reminder that money would run out, so you had to adjust your spending accordingly. So instead of using real jars, consider setting up digital jars, opening up separate accounts, or set digital goals that allow you to save and invest for everything from your kids' activities, retirement, a vacation property, or anything else you may be planning for. I'm Kim Parlee, and that's your Money Talk Minute.
So you rich yet?
Since I switched to Equestrian, the lower fees are making a big difference.
Sounds complicated.
Please, Equestrian makes it easy. They have different investing options, including Questwell's portfolios, which they manage for you. You're not still investing with mom and dad's guy, are you?
It's time to switch to Questrade, Canada's #1 rated online broker and ranked #1 in investor satisfaction by J.D. Power.
Christine was on our show November of last year, November 12th. Her first idea was Fortis, and this one up over the period.
It is up, and it's a regulated utility. 99% is regulated. So once again, we consider this a very stable defensive income stock. It gives you a yield of about 3.8%. Fortis just had their investor day a few weeks ago. They've confirmed that they plan to increase their dividend annually by 5% through 2025. They have the capital plan in place to do this. So we continue to like this name as an income name, especially the visibility in terms of the dividend growth they have over the next few years. And they've actually increased their dividend for 47 consecutive years. So they've got the track record to show for that as well.
Mondelez International, the snack food global player, was your next idea. This one's posting again as well.
Yeah, global snacking company, #1 in biscuits and candy, and #2 in chocolate. And then they also play in the gum space. So, Mondelez, one of the reasons why, we've owned Mondelez for a number of years, and one of the reasons why we own this consumer staples company is that about 40%, just under 40% of their revenues come from emerging markets. And we think that's a higher growth market longer term. And I think as, that will continue to grow, and they've got great brands. But in this pandemic, what has happened actually, they've seen stronger growth in the developed markets. They've seen people are eating more at home. They're going to the grocery store and buying well-known brands. And, Mondelez has many that you would recognize: Oreo, Ritz, Triscuits, Dad's, Christie's. And, they've seen that a lot of new consumers have come to their brands. So they think that they can put the marketing efforts to retain these new consumers, and think they can do it. And as well, in terms of valuation, it does trade at a discount to other global consumer products companies. And I think that gap should narrow over time. So we continue to like Mondelez.
And your final idea, also gaining altitude, Yum Brands, the fast food giant.
Yes, fast food, quick serve restaurant. Their 3 brands are KFC, Pizza Hut, and Taco Bell. KFC is the most important because it accounts for 50% of their operating profits. And KFC, we own that. We broadly own Yum. Is their exposure. One of the reasons is their exposure to China. Yum China was spun off about a year and a half ago. They have a big presence in China. They started developing that market many, many years ago. And so that's a growth area. There's still a lot of growth potential in China. And as well, Yum is also focusing on other markets that represent long-term growth, such as India and some of the other emerging European markets. And they've actually they were impacted by COVID, obviously, especially when it first hit. But they've made a very good transition to drive through. And then more recently, earlier this year, they bought a 4th brand called Habit Grill, which is a new category. It's grilled burgers. It's California-based, very small, only 300 units, and Yum has 48,000 units globally, so it's very small. But we do think it's kind of a potential 4th leg to grow in a new category, and then Yum can manage to apply their expertise to grow this brand and potentially franchise it out.
Okay, I'm just curious, what about QSR restaurant brands, Christine? Do you like the look of that one?
No, we've chosen, Yum is our only investment in the QSR, or in the rest of that fast food QSR space. And the reason being that it is very global. China is a third of their operating revenues, and so we like the global presence. And because we do think, within North America, arguably quick service is relatively mature. It's very competitive. You have to innovate and keep ahead of your competitors, which Yum is. But once again, you want that expansion, that unit expansion potential in emerging markets that have not fully developed.
Okay, we are going to take a break. Christine Poole is taking your questions on North American large caps, 1-855-326-6266.
Does it look like the sun is shining through my PS4? Like, this shit ain't no joke. Go here. Quick song.
Interactive Brokers charges 1.59% for a $100,000 US market. You know how much your broker charges? Upwards of 6.82% for Ellinger Schwab. To as high as 7.45 to 7.75% for Trader Ameritrade. Boost your account to Interactive Brokers.
Hello and welcome to another presentation of Garden State IAA News. I'm Joe Lobby, joined by Drake Hugo and Danny Hogger. Tonight, the Newark East Eagles are going up against the North High Dragons. Danny, your thoughts on this one?
Well, the big story tonight, Junior is not in the lineup. We don't know what his status is for the entire game, but he was spotted in street clothes. Overall, a huge blow to the Eagles.
Shoot it with 100 times zoom.
There's the
Samsung Galaxy S20 Ultra 5G. Share it, lightning speed.
Eagles on offense, holding, waiting for something to open up. Oh, and an ugly pass there into the first row.
Eagles really struggling out of the gate without Junior.
Traditional slot, 11 a.m. Eastern Time.
Looks like he might be in for a long time.
And he holds it up top. Beautiful pass.
As we continue to fight the spread of COVID-19,
Wide open
there
way.
are new
Here it
support
is.
programs in place for those who need
Back
it,
the other way.
including stronger and more accessible
And
AI
get the easy
and
from
3
you.
new recovery
Things are going
benefits.
from bad to worse quickly.
Continuing to support Canadians now will help keep us safe and in Canada going forward.
Here we go.
Visit Canada.ca/coronavirus to learn about the new
Without Junior, the Eagles look
We need to be realistic.
Nothing is working for them right now.
In the way we live.
And we've reached that point.
We're in the middle of a life-changing reset regarding distribution.
Plenty more to come right after
For over
this.
5,000 years, an ounce of gold could buy you a product or service anywhere on the planet, and you don't even have to speak the language. I want for my family the same thing that you want for yours. Choose wisely what you invest in.
Let's get to the next caller. Carla in Edmonton, you've been waiting very patiently. Go ahead, please.
Thanks, Andy. My question is on CVS. I've owned it for a few years, and I'm just wondering if it's something worth continuing to hold. I haven't done terribly well, but I also haven't, lost anything either. I originally bought it for about to something in the healthcare space, so just looking for your thoughts on that.
Sure.
Thank you.
I would continue to hold CVS Healthcare. It is a name in our client portfolio. It's an HCI retail pharma. They have a PBM business and then a health insurance company they bought earlier this year, Aetna. And so the company reported their earnings, I think it was about a week ago, a pretty good quarter. The stock, price is going favorably to that. And I think the stock's trading at a very attractive multiple, and the price to earnings multiple is still single digit. The whole kind of healthcare reform, potential healthcare reform was an overhang on CVS in terms of their PBM business. And I think now that it looks like we're going to get just over 5% share, and that's still it's pointing to, then that means that will not be able to implement to the extent that we want it to be. So I would keep holding it. I think that the valuation, the earnings multiple should expand, and the company should do well over the foreseeable future.
Let's head to Edgar in London, Ontario. Go ahead, Edgar.
Yeah, so thank you for taking my call. I'm phoning about PPL, and I do have Enbridge, but I was wondering if PPL would be a good stock. I like the gas, so can I get your opinion? Thank you.
Sure. We hold, I mentioned before, we do hold Pembina in our client portfolios as well as our income name. It's our kind of, we have two in that infrastructure name. And so it's also yielding over 8%, got close to 9% at one point. The company reported on Friday as well. And, I think it's a good income name. You could add it as a second name for infrastructure. I wouldn't make it, I'm not sure what kind of weighting you're thinking. We usually hold about, anywhere from 2.5 to 3.5% in each of the names for income. Once again, this company, when the pandemic hit, they actually put a lot of their growth projects on hold so that they can maintain their balance sheet and cash flow and their guidance, and they've been able to actually maintain their guidance actually they put out pre-COVID. So now the big question is, do they slowly bring back some of these growth projects, which will help their cash flow going forward in the future to grow, or will they, keep some of that on the side and once again look at stock buyback? Because once again, that was a discussion on the conference call because the valuation is so cheap right now. So I think it would be a good addition as an income name. I think that dividend is safe. Pembina has maintained that they see the importance of that dividend and they would like to grow it over time. But once again, when it's already yielding 8%, I don't know if it's even necessary to increase your dividend. But it's a highly profitable business. The pipeline, the midstream operations are under long-term contracts. So I would recommend it as an income name.
Let's head to Fort Saskatchewan. Murray, go ahead, please.
Thanks, Andy. First-time caller. Sticking with the energy theme, Christine, I think you're adding to my Enbridge or Suncor, and I heard your comments on Enbridge. I'm just wondering what your thoughts are on Suncor.
Okay.
Thank you.
Lots of energy today. Well, we don't hold any energy producers just because I think in terms of our commodity price outlook, for crude oil, it's not that favorable. We think there's not a lot of visibility, especially in Western Canada. So for me myself, when we hold Enbridge as an income stock, and Suncor would not necessarily qualify as an income stock because I think the cash flows of energy producers, a lot of it is predicated on the commodity price, which can be difficult to forecast. And so we want to see a growing cash flow stream, and that may not happen with Suncor if commodity prices, trend down. And so of the two, my preference obviously is Enbridge. We're not looking to add it to any producers right now in our portfolios, and we haven't held any for the last, since 2015 actually, so it's been a while since we've had any Canadian producers in our portfolios.
Bob is calling from Mississauga, Ontario. Bob, go ahead, please.
Before taking my call, I would like to know Christine's opinion about Brookfield Property Partners, ticker is BPY. First of all, she thinks the dividend is safe, and at the current price, if the stock is buy, hold, or sell. Thank you so much. I'll hang up and listen.
Okay.
Thank you.
So we don't own Brookfield Property directly. We hold it through its parent, Brookfield Asset Management, which owns about, I think it's 50 to 6% of Brookfield Property. And so, I do think that for Brookfield Property, their dividend should be safe. They're also going through a difficult time, especially in their retail properties, which is about half of their portfolio. And, retail is going through a transition with COVID. But their properties, both on the commercial and retail side, are very Class A, well-located properties. Brookfield has a good record of repurposing properties. It makes more sense to generate more value. So I think they will work it out. If it's not going to take a while to get all this to work out through. I think they will do it. They have experienced management team that have gone through many other economic crises. So I guess if you want to direct property investment, Brookfield Property could be that name. We've just chosen to own it through Brookfield Asset Management because we also like the other divisions within Brookfield Asset, as well as their alternative asset management position in that space.
As they are, they don't even tell the whole story, guys.
Let's take a break. Christine, please go to the
Too often, this is the story with us. The pocket was well protected, but still he couldn't finish. just create a start like that. Most music customers sat them down and told them, you run the network series. Don't worry about that much.
We switched to new Time Plus Daily Free. This channel offers you clean total organic new Time Plus Plus Daily Free. Save your sensitive skin and maximize psoriasis. So you reach it?
Since I switched to question, the lower fees are making it big. Sounds complicated. Please, question makes it easy.
Different investing options, equity plus both portfolios, which they manage for you. You're not still investing with mom and dad's there, are you?
It's time to switch to Questrade, Canada's #1 rated online broker and ranked #1 in investor satisfaction by J.D. Power.
Closed captioning of this BNN Bloomberg program is brought to you by Brixton Metals, a gold, silver, copper company with exceptional drill results, great liquidity, and well-financed.
Dave in Toronto, go ahead, please.
Thank you. King Call. I want to ask Christine about Impact Financial. That's a company that keeps raising a dividend, and it's a company that kind of has like a big footprint in Canada, and they just bought a different company, I think RSA, and I just wanted to see if Christine has ever held this company in the past, or if she holds it right now, and if she thinks it's a good hold for the future, because insurance, as you know, car insurance is really expensive, and everything's really expensive, so this company's making a lot of money, and I was wondering if you have ever considered it or have bought it as a catcher right now. Thank you.
Okay. So, Dave refers to the fact they're bidding, Christine, for RSA, could be a multi-billion dollar takeover of it, yeah.
Yeah. We don't never own Impact Financial in our client portfolios, but I think it looks more interesting now with this potential acquisition, because it really grows their share within Canada, as well as their presence outside of Canada, in the U.S. and I guess in the U.K. as well. I know one of the concerns was the UK operations of RSA, but it sounds like they have to pay pretty attractive price for that business. So we've never owned it, but I do think I'm actually planning to look at this company more closely, because I think this acquisition really expands their growth, like in terms of potential for years to come. And they have excellent offering within the PC business within Canada. And one of the nice things about PC is that they can get it repriced almost annually, because you typically have to renew your home insurance or your car insurance every year. So if something adverse happens or they have to adjust their premium pricing, they can do that fairly quickly. And that's not necessarily true as other types of insurance. So that's the one part of the PC. So again, this is, I think, this potential transaction makes it more interesting. And I'm going to do my thing on the end all the way through. Not backing out the shot, because it's a tough deal.
John in
Throughout the season, Junior's been playing the shadow of his dad. Duke was just a huge figure in the basketball community. And that had added to his success. We've always called him Junior's story is one that you can see in a documentary one day.
Yeah, I think that TD Bank is one of the bankers that has portfolios is one of the about 3 Canadian banks, where 4 Canadian banks are in nature kind of core holdings. And we like TD, but I think this as a whole, because you're right that they have lagged in performance year to date, and all the banks, all the Canadian banks offer aside a lot of provisions this last year because of COVID, the economy, and recession. They have to look at the productivity that exists to kind of project how much they have to put aside as provisions. So I think the levels of provisions have peaked. And I think the Canadian economy, and even the U.S. economy, is actually probably improved at a faster pace than one might have thought back in May or June. So that's a good sign, because that means that potentially there's less provision that have to put aside, and eventually maybe they might start actually releasing them as things get really good. And so, and also the Canada assistance that we've gotten from the government in terms of financial assistance. That will help on the mortgage side, because mortgages are, one of the primary use of loans and banks have. But we've seen that people are free to
okay, we'll buy it maybe on weekdays. Ram in Calgary, go ahead, please.
And here's Gibson.
Oh, I'm sorry, I think I jumped Henry.
From downtown.
Okay, is that Ram?
That was good that time. The Eagles trailing.
Go ahead, Ram.
Here's Mason. Shot, no good. A nice little lead there, Joy. I think it's Griffin Farnsworth they put in on the glass. And they hold a big varsity league out.
So Microsoft
Tweeted out there in the board.
technology needs to
Yeah.
the transition to the generation of Office 365, and many of the users are doing well. I think at this price level, I think it's around $215. I would wait for a pullback, maybe a 5% pullback to buy and start building a position. That's what I'm doing for the new client money. But we definitely think that Microsoft is going to do well long term. We like the positioning there as they are in, and so once you wait for that pullback and start looking at it.
Let's squeeze in one more caller. Sorry, Henry, I skipped you. Go ahead, Henry. I'd love to talk to you.
Yeah, I think we're Zoom video that Big Daddy that they had, and then my question being on the cards and
we don't vacations, and honestly it's software that tremendous performance because of the pandemic and how they're so compensating. And there's a lot of expectations built into the stock. It doesn't make any money. I don't know, it's trading at like huge multiples of sales. And so, it has to keep adding people to businesses or to its base of clients to its base. Now, I do know that I think about a third of their client base is small business under 10 employees, and I believe the traction, the renewal rate is very low, and people will just come and go. But that's very important because they have to continue to grow their addressable audience. I wouldn't be buying here. Obviously, it's got a lot of momentum behind it. The pandemic, we'll have to wait and see what happens here now when people are working from home, not everyone works from home. And there's competing products out there as well. Obviously, Microsoft has their Teams product. The security behind Zoom is identifying what's happening out there. We're going to fix that. So, for myself, valuation is way too high and too much momentum and expectations.
And he gets the bucket to go. Outstanding work by figuring out how to score on the D. You see the muscle Junior possesses. And some fantastic passing for them in this one. The ball is flying around. They look like a disciplined, well-coached team out there. Now here's Stopper. He's guarded tight. Pass to Hopkins. Foul on balls. And this run was exactly what they needed to put the game away. Yep. This is how to seal a win in style. And here's Junior outside. Junior just can't seem to get anything going right now, and you can just tell that he isn't close to 100%.
You try to stay ahead of the mess, but scrubbing still takes time. Now there's Dawn Power Wash Dish Spray. It's the faster way to clean as you go. Just spray, wipe, and rinse. It cleans grease 5 times faster. Dawn Power Wash. Spray, wipe, rinse.
Capital preservation. It's what portfolios are all about. What makes some portfolios more whole than others? We think it's the inclusion of alternative investments. Alts make a portfolio whole. Visit 9point.com to learn about alts. 9point, your alternative.
Remember to join us on Market Call tomorrow. The Market Call tonight, right now. Our guest is going to be Jason Mack, Chief Investment Officer at Hedge Partners. So take your questions on North American stocks.
And it just goes to show that it takes 4 quarters of excellent play to win a game.
Watching Market Report. Joining us today,
What makes you believe the company is strong?
I think with the jurisdiction we're in, the place we're operating is the #1 piece, and we have an inferred resource of 523,000 ounces. We're only west of Sudbury along the highway, and we have a unique piece because we will not be a big mine, so have a big footprint. think, because this will be an open quarry and we can crush and ship just like ice in this material.
What are you currently working on, and can you talk about the next steps forward for Canadian Plate?
We have a drill rig on, even in the COVID times, we've got a really good program, drilling off our inferred resources to take it up to hopefully a 1.5 million or greater. And we've had great drilling results in the last 2 news releases, and we're finding the resource that we think is there.
Thanks for joining us.
Thank you.
So you rich yet? Since I switched to Questrade, the lower fees are making a big difference. Sounds complicated. Please, Questrade makes it easy. They have different investing options, including Questwell's portfolios, which they manage for you. You're not still investing with mom and dad's guy, are you?
It's time to switch to Questrade, Canada's #1 rated online broker and ranked #1 in investor satisfaction by JD Power.
Top Picks is brought to you by Questrade, Canada's #1 rated online broker and ranked #1 in investor satisfaction by JD Power.
Christine's first idea, Otis Worldwide.
So Otis was a spin-off from Raytheon Technologies earlier this year, and we decided, we own Raytheon, and we decided to keep Otis, and we actually bought more Otis shares for our client portfolios. And yeah, I like Otis long-term. It's a great, we like the escalator and elevator industry as a whole. Otis is the #1 player with a 17% global share. It's an oligopoly. The top 5 players have about 7% of the market. Otis's primary competitors are Kone and Schindler, which are European-based. So why we like that industry is that the service side is very attractive. So typically, the client will buy the original equipment, which is the actual elevator or escalator. And then there's a service contract that comes with it, or you can choose to go with the original equipment manufacturer. Many clients do. And that service is very high margin. So to give you an example, the service business for Otis counts for 57% of its revenues, but 80% of its profits. So much higher margin than the original equipment. And that service contract tends to be years in duration, like 10-year contract. The renewal rate tends to be relatively high. So a more defensive cash flow stream and more recession resistant. And then finally, in terms of their long-term growth opportunities, a third of the installed base of elevators out there are greater than 20 years old. And typically you need upgrades once they get to that 20 to 25-year age. So there's a great upgrade cycle coming along for Otis. And I talked about that attach rate to service. In China, it's a little different. There's many more independent providers of services, and the attach rate in China is not as high. And Otis has a presence there, and they want to increase their attach rate to get that service contract. So they're going to devote investment and marketing initiatives to do that. We think that's a good, that's a good opportunity to grow that more lucrative side of the business. So, like the industry, we like Otis' positioning, and so we like this liquid investment and long-term growth investment for
We have about 3 minutes left. Visa is your next idea.
Yes, okay, so Global Payments platform provider, Windows Visa, credit, so they benefit from the secular trend of using cash or check to any sort of digital form of payment, whether it's debit or credit or prepaid. So Visa, they have benefited from this surge in e-commerce, but their revenue, they have a 10-year fiscal year end, their revenues are actually down 7% and earnings down 5%, but typically they grow 15 to 20% top line and bottom line. So what I call Visa back is the transport volume. Travel, when you travel, so business travel, they tend to have, people are using debit more because it's smaller transactions, so that's going to benefit the Visa, but it's the larger credit transactions. Those volumes have come down a lot because of no business and vacation travel. We see that as the economies open up and recovers, that should return. So we like the position long term. I think there's still a lot of secular growth opportunity in the digital payment space.
Your final idea is WSP Global.
So this is a global design engineering firm based in Montreal, a very global presence. Only about 50% of the revenue are actually in Canada. This company has grown through acquisition as well as organic growth. This past year, obviously, COVID growth has slowed, and especially on the M&A side, because it's more difficult to look at deals when you're, you know, concerned about things locally. Looking at the equity issue earlier this year, so that really strengthened their balance sheet. They have a lot of dry power to put to work when M&A activity picks up, and we think it will. Organically, they're well positioned in the transportation infrastructure industry and market in the U.S. So I think infrastructure is a natural solution for a lot of governments to stimulate the economy, and obviously, Biden is the president-elect. Comes in play, we think that they will use the stimulus bill. And with the most parties are right in Canada, so I think that will benefit from that with it. It's going to take a number of years for that to flow through, but that will be a benefit. So attractively priced, we like that space about the balance of early design and advisory services, not in construction, which is where a lot of these engineering companies get into difficulty.
Sheffield, outside.
I'm thinking of SNC, they're trying to move away from projects where they have to incur risk.
Exactly, it's taking a long time, and the ones that they thought they put to bed, if we saw in the last quarter, have, you know, come up, so they're really quickly had that fixed. So that's an area that we want to cover for construction side.
The college level someday already.
I bet if you're in a certain business, you hate to see a project rise up and to haunt you again. Yeah. Christine, thank you very much indeed for joining us.
Thank you, Andy.
She's been our guest on Market Call, Christine Poole with Global Invest. Let's take a quick look at the markets before we go. We'll start off with the big American indices because we have seen some selling south of the border. Wall Street Journal says the industrials, the consumer staples, seen as economically sensitive, have come in for some of the selling. And people are, though, to some extent, turning to the tech and internet companies. So we did see the Dow and the S&P recover from earlier lows, but there is pressure on equities right now. A lot of it about the rising COVID case counts, new restrictions going on in New York, for example. Let's have a look at the TSX and then oil prices. We had Stephen Short on our commodity show earlier saying he doesn't see much upside for oil from here, partly because he says gasoline demand in the States is just in the dumps. There is oil, though. It's holding its own today, not far short of $42. Let's have a look at how the U.S. dollar index is doing. Now, we've seen the U.S. 10-year yield slipping a little bit today, implying that people are seeking a refuge in U.S. government bonds, and you can see the U.S. dollar up, but by only about 1/10 of 1%. There's the yield, though, but you know, you look at the way the yield has moved up since the summer. I didn't know it was that significant. Since we're at around midsummer there, August, we were at only 0.5%. So the yield has gone up to about 1%, an indication that people feel that we're not at risk of deflation here as the economy struggles through COVID-19. Thanks very much indeed for watching Market Call. We'll be back with Jason Mann tomorrow.
Market Call is brought to you by CPP Investments, investing for generations.
Since 1979, Middlefield's been a leader in real estate investing, generating superior returns for Canadian investors. We go beyond current market headlines, identifying real trends which are often overlooked by competitors. Our extensive track record covers real estate management, acquisition, and development across private and public markets. We have a proven ability to capitalize on opportunities with conviction, consistently creating long-term value for our clients and partners. Middlefield Real Estate. Don't be passive with your wealth.
What's considered normal anymore? Escalating economic and geopolitical uncertainties will continue to disrupt capital markets. Many of the things that we've taken for granted have now been called into question. And events that once seemed unthinkable have come to pass. More than ever, risk management requires a multi-asset, multidisciplinary approach. One that considers the many facets of an increasingly globalized world. Because in the new normal, there is no normal.
Give it all you
for the ship-a-thon, because the obstacles are bigger than ever this holiday. Shop and ship early. FedEx.
So you rich yet?
Since I switched to Equestrian, the lower fees are making a big difference.
Sounds complicated.
Please, Equestrian makes it easy. They have different investing options, including Questwell's portfolios, which they manage for you. You're not still investing in the desk, are you?
It's time to switch to Questrade, Canada's #1 rated online broker and ranked #1 in investor satisfaction by JD Power.
The following is a paid presentation brought to you by Mackenzie Investments. The opinions expressed are not necessarily those of Bell Media, Inc. and do not constitute financial, legal, tax, or investment advice. Contact an advisor before making any financial, legal, tax, or investment decisions. Guests appear on behalf of Mackenzie Investments. Building portfolios for the next decade is brought to you by Mackenzie Investments. Investors, advisors, Mackenzie. That's better together.
It's been a wild year in the markets, with 2020 characterized by wild swings in equities, a flight to the tech titans, and interest rates plummeting to historic lows. That volatility underscores the importance of prudent management to build a durable, well-diversified portfolio to guard against unexpected bumps in the road. Over the course of the next half hour, we'll take a look at how Mackenzie Investments helps clients navigate this uncertain environment through prudent advice and deep market knowledge. Joining me now for more insight is John Cook, Portfolio Manager of the Mackenzie Global Environmental Equity Fund and President and Director of Greenchip Financial Corp. Welcome, John.
Hi, how are you?
Great to have you. John, we've heard a lot about tech this year. Does the environment remind you of the dot-com bubble?
It absolutely does. When you mentioned the FANGs, they're the clear winners out of this. It was less certain who the winners were going to be in the dot-com bubble. But we have many other companies that are trading at ridiculous multiples of sales and, huge market cap valuations that, to us, are going to have a really tough time on the other side when this bubble finally deflates. The real challenge for us in these bubble economies is they clearly are misallocation of capital. And it's so clear right now that we need to rebuild infrastructure in this world. We need to create a more sustainable economy for the future, and that's going to take capital investment. And when we're investing too much in companies that either look really certain but don't have any use for their capital, like the FANGs, that are producing lots of free cash, but using it to buy back their stock or dividend, not really growing their business, that means there's less capital that can go to building this more sustainable economy. Now, I don't want to say that our sectors, the environmental sectors, are not exposed to the bubble. We have some Hollywood stocks in the mobility sector, like Tesla and Nikola, and some of the plant-based protein stocks. So it's not like we've been totally unexposed to this, but I can tell you, if you look closely at our space, for managers that follow it, there's still some very well-priced businesses that have tremendous growth in front of them that I believe the market is missing because they're not as focused on this space. And so, yes, we're in a bubble economy, and it really worries me, but I do think in our specific sectors, there's opportunities.